Chinese markets plunged on their first trading day after a long break on fears the coronavirus would hit demand in the world's second largest economy. Despite the Chinese government taking a number of steps to shore up the domestic economy, the Shanghai Composite dipped over 7% to a 4.5-month low. On the data front, China's manufacturing activity expanded in January, with the market Caixin manufacturing PMI for January arriving at 51.1 versus 51.3 expected and 51.5 in December. As for other indices, Hong Kong's Hang Seng rose 0.35%. In Japan, the Nikkei 225 fell 1.01% to close at 22,971.94. South Korea's Kospi closed largely unchanged at 2,118.88. Meanwhile, shares in Australia tumbled as well, with the S&P ASX 200 closing 1.34% lower, and overall the MSCI Asia ex-Japan index was 0.81% lower. Meanwhile, European markets closed higher Monday, bouncing back from a deep sell-off last week as fears over the coronavirus outbreak appeared to ease. The Pan-European Stock 600 closed up by 0.3%, led higher by technology shares after the People's Bank of China announced that it will inject $173 billion worth of liquidity into the markets via open market reverse repo operations. The UK exited the EU on Friday and has now started an 11th-month transition period in which it hopes to strike a trade deal with the bloc. Negotiations are expected to be turbulent after the UK's foreign minister said over the weekend that the UK would not be aligning with EU rules, quote-unquote, in any post-Brexit trade deal. On the data front, Eurozone manufacturing PMI readings came in at a 9-month high of 47.9, but still stayed below the 50-point benchmark, which represents growth. Germany manufacturing PMI climbs to an 11-month high of 45.3 from December's 43.7. The index has now risen in 3 of the past 4 months from a 10-year low last September. U.S. stocks bounced back Monday, taking back a chunk of Friday's brutal sell-off. The Dow Jones Industrial Average gained 0.5% to end at 28,399.80, while the S&P 500 index climbed 0.7% to close at 3,248.92. The Nasdaq Composite Index advanced 1.3% to 9,273.40. The gains were helped by easing concerns over the China coronavirus, as well as upbeat data on the manufacturing sector from the Institute for Supply Management, whose Purchasing Managers Index rose to a 6-month high of 50.9% in January versus expectations of a 48.5% reading. Construction spending fell 0.2% in December versus expected growth of 0.6%. In currencies, the dollar shifted into a recovery mode following a steep sell-off on Friday. As such, the euro-US dollar encountered resistance around 1.11 and was rejected to the lows at 1.1030, below the 100 DMA. The GBP USD plunged from highs around 1.32 and dipped below the 1.30 psychological handle once again. Meanwhile, the USD Japanese yen rebounded from local lows and has settled between the 100 and 200 DMAs. And oil prices extended losses to 1-year lows around $54 as the coronavirus outbreak and its potential impact on demand continue to weigh on market sentiment. OPEC and its allies could cut production by more than 1 million barrels a day at a rescheduled meeting that will take place today and tomorrow in Vienna. As such, market focus now shifts to this event. A full OPEC meeting is likely to follow next week. Saudi Arabia's Energy Minister Prince Abdulaziz bin Salman said OPEC Plus would step in to bolster prices if needed. And that is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.